a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A shortened trading session starts with the S&P 500 at a record. Gold also breaking through $4.50 an ounce for the first time. Wins for President Trump as a court rules the administration can move ahead with $100,000 fees for new H-1B visas. And Japan and the US agree to expedite $550 billion in investment projects. And deals under the tree. BP sells the majority of Castrol to Stonepeak. Sanofi buys Dynavax. So let's take a look at these markets. There might be a little bit of profit taking today. We'll see. The picture could change, but there are 3.5 hours in equities trading today. The market, of course, closing at 1 p.m. The bond market closes at 2 p.m. Nonetheless, if you've been in this market, the S&P 500 for the year is up more than 17%. The Nasdaq 100 up 22% after yesterday's 0.5% gain for both of these indices. The Russell 2000 has been the laggard, but it's still up 14% year to date. The SOX, by the way, has had a lot to do with the last few days' gains for these two indices. The SOX up 7% plus just since last Thursday. And let's take a look at bonds because, of course, after the GDP data, we saw a tiny bit of movement, but nothing really happening today. The 30-year yield still at 4.82. That 2-year yield not going anywhere, still at 3.5260. And of course, we're watching all of the metals. Gold coming off its high, but it did get to that intraday record. And of course, we have silver, platinum, palladium, copper, all up there. We're watching currencies too, with the offshore yuan in particular perilously close to that 7 mark. All right, let's get to some individual market movers now. We'll get over to London. And Lizzie Burden. Good morning, Lizzie.
Good morning. Merry Christmas Eve, Bonnie. And I want to start with the M&A that you mentioned, Dynavax, which French drug maker Sanofi has agreed to buy for $2.2 billion. So confirmation of that deal landing minutes after Sanofi said earlier that the US FDA had surprisingly rejected its multiple sclerosis drug. So a surprise step into the vaccines market for Sanofi despite the difficulties in it. Sanofi shares were flat in Europe. We'll mind how Dynavax opens in the US, but it's already up 37% in the pre-market. Flipping over, and we're also keeping an eye on AST Spacemobile, which launched its biggest ever satellite from India in a challenge to Elon Musk's SpaceX. So the two companies battling it out to deliver space-based connectivity to mobile phones. And that successful launch, a big boost to AST. It already has 5 smaller commercial satellites in orbit. It wants to launch 60 more next-gen satellites in 2026. So are those shares going to take off in the session? They're already up 2.7% in the pre-market. Finally, we've got to look at Nike as well. It is Christmas Eve after all, so we end on a shopping theme. The Apple CEO, Tim Cook, who happens to be on the Nike board, has bought nearly $3 million in Nike stock. So you're looking at Nike up 2.4% in the pre-market.
Fascinating. Lizzie, thank you so much. That's Lizzie Burden there in London. And coming up this hour, we're going to be speaking with Geoffrey Yu of BNY on this Santa Claus rally and what's to come in 2026. So, stocks climbing to another record as the year closes out, and data shows the U.S. economy expanding at its fastest pace in 2 years. Joining us now is Bloomberg's Adam Linton. All calm, it seems, on the stocks front at least. Adam, is there anything waiting around the corner for us?
Yeah, so, at the moment, this isn't really particularly a macro trade that people are putting on. It's very much just a low vol trade with, people joining in on the Santa rally. So, looking ahead to 2026, there are quite a few risks that are on the horizon. Obviously, we've seen increased scrutiny on some of the AI names early this month. Likes of Oracle, they're getting scrutinized for, some of their CapEx spending. We've also still got a trade war lingering on, with US and China. Are there any potential conflicts on that front? And also, there's a lot of hope placed on the monetary perspectives as well for the Fed to keep cutting rates. Also, we'll bear in mind that, next year is also an election year for the midterms, and we could potentially see an outcome whereby the Republicans lose that clean sweep. They have to hand over control to one of the houses, and that may potentially restrict some of the fiscal impulses that we've been seeing throughout 2025 and heading into 2026.
Yeah, a lot on the agenda and on the radar. Today, we're also seeing pretty big moves for certain currencies, particularly South Korean won. It's stronger by more than 2% after verbal intervention. Same for the yen. We're down now at 155.83, but these are still fragile currencies all the same.
Yeah, I mean, with the Japanese yen, obviously you've got Japanese officials coming out in full force trying to talk, the currency up. And in these quiet markets, yes, they're having a bit of success, but ultimately the broader dynamics for the yen do remain in place. It has very much a real negative rate, and the Fed has a lot, the US has a lot bigger advantage from a rate perspective against the Japanese yen. And there is the threat of potential physical intervention, but really they need to see some actual broader dollar softness like we saw last year when they were a bit more successful with their intervention for this to be a more durable move in the yen.
I do want to point out the fact as well that China's offshore yuan is trading right now at 700.54, so it's getting perilously close to getting underneath 7 for the first time in a long time. Adam, can we continue to expect to see yields rise around the world?
Yeah, I think, that's been incredibly thematic. I think, part of that is a rate story for different central banks. If you take the likes of the RBA, the BOC, and then to a lesser extent the ECB, people are now beginning to think about, we've had this rate cutting cycle, when do those rate hikes arrive? Then also as well, fiscal largesse, some of those issues in the US, they have not gone away. So while we may see the front end of the US curve relatively anchored or possibly even go lower, the same can't be said for the back end. And, if you do have some of these major global markets rising higher, it would tend to sweep up everything else. So yeah, I think there's definitely a further upside potential for back end rates.
Adam, thank you so much for joining us this morning. That is Bloomberg's Adam Linton. President Donald Trump's $100,000 fee on new H-1B visa applications has been upheld by a federal judge. It's a major blow to tech companies that rely on hiring skilled foreign workers. Bloomberg's Kasia Klimashinska joins us now from Washington. What's next with this case, Kasia? Is there an appeal to be seen?
Indeed. Hello. This is good news for President Trump, but not great news for tech companies like Meta, Microsoft, or Amazon that have been bringing those foreign skilled workers into the U.S. using this visa. But it's also used by the healthcare industry, for example, and a lot of public sector employers as well. So there are more lawsuits that have been filed against this new, very high $100,000 fee. And there's also an appeal. So it's a very much developing story. But for now, a big win for President Trump, with the court saying that he can charge as much to bring foreign workers into the U.S. as President Trump is trying to limit immigration and create more opportunities for Americans.
Kasia, there was a development, it seems, as well in the Russia war on Ukraine. Zelensky of Ukraine obviously seems to be wanting to open the door now to a demilitarized zone in Donetsk, but Russia would also need to get out of that region. Is it any kind of a workable plan at all?
Yes, that's a very hot topic. We're watching the story. It's a developing story. We're watching especially for a reply from Russia. We know that President Putin spoke to his envoy. He will look at his, the summary of what has been discussed over the past weekend in Miami, where the U.S. held those parallel talks with Ukraine, but also separately with Russia, trying to find some sort of an agreement. And as you mentioned, President Zelensky came out with fairly optimistic comments, but the main area of disagreement is still the land. So Ukraine wants to end the war along the current line of contact, whereas Russia wants to get more land, the land that it doesn't currently control.
We'll see how that discussion progresses. Now, there has been a discussion between Japan and the U.S. as well, with Japan agreeing to expedite that $550 billion in investment projects promised. When do we start seeing results? What does expedite mean in this situation?
It sounds like we will see those investments soon. We know that President Trump issued this threat of higher tariffs on goods from Japan if Japan doesn't invest. So now there are talks going on between the U.S. and Japan on which specifically projects Japan will put its money into. And then once those projects are decided on, they will land on President Trump's desk to get his final approval. But that's, again, part of this broader plan of this administration to bring more jobs into the U.S., to restore both manufacturing and also some high-skilled industries in the U.S.
And it seems there's been movement as well on that deal with South Korea involving nuclear submarines. It's been a while since we've heard about any movement on a South Korea deal. What are the details?
South Korea is seeking to produce nuclear-powered submarines, and that's something that the U.S. is willing to help in, even as broadly there is an agreement for South Korea to not use nuclear fuel. But there are those ongoing talks this week and perhaps more next year about an agreement that would allow Korea to collaborate with the U.S. to build those submarines as long as this nuclear fuel is low enriched uranium, so 20% or less.
Kasia, thank you so much for always keeping us up to date on everything DC related. That's Bloomberg's Kasia Kimishinska. BP shares rising after agreeing to sell a majority stake in its Castrol lubricants division. The UK oil giant will divest 65% of Castrol to US investment firm Stonepeak Partners, raising about $6 billion. BP will retain the remaining interest via a joint venture. Bloomberg's big oil reporter Mitchell Furman joins us now. So this Castrol sale, it means BP can continue to streamline its portfolio, which had been the plan. How much does this help, and what's next for the new CEO, Mitchell?
Good morning. Yeah, the Castrol was a centerpiece of BP's strategic reset announced back in February when the energy giant decided to return to oil and gas from its failed low-carbon ventures. And Castrol was the marquee asset sale as part of its $20 billion divestment program by the end of 2027. And the expectation was that Castrol could bring BP as much as $10 billion. So while the price they got today falls short of earlier expectations, it is a notable move by the new chairman, Albert Manifold, who's already made his mark last week by replacing the CEO.
Now, what is Stonepeak going to do with Castrol? Apparently it does have a business that's possibly very, very profitable when it comes to data center cooling.
Yeah, Stonepeak says that it is looking to build on what BP has already started. Castrol is a legacy brand that's global, and so it might fit better for Stonepeak than BP. BP, while it has controlled Castrol for 25 years, it has not fully integrated the brand into the rest of the company. For example, BP is a major commodities trader, and because it has insights across the market through its assets, upstream, midstream, and downstream, it's able to take advantage of those trading advantages. But Castrol was never really integrated into the trading business, so BP feels that it can part ways with Castrol, not lose its trading edge.
And of course, there's still some way that it can benefit from any upside, right? It still does hold a minority stake. So what is next then for BP? I mean, it had hoped to get more money, I'm understanding here, from this divestment. Where can it now replace that money? I mean, Elliot's been involved as well. Everybody wants BP to sort of get itself under control.
Yeah, so BP has now reached $11 billion in asset sales this year, the company announced. So that is more than halfway toward the previously announced $20 billion in divestments targeted by the end of 2027. However, there's a lot of uncertainty at BP once again because they abruptly replaced their CEO last week. Meg O'Neill, the incoming CEO, starts in April. There is yet another interim CEO at BP. Staff at the company are shocked by the move, and it caught nearly everybody by surprise, the abrupt nature of it. And they are wanting answers. That they're not sure what is next under this new CEO. They've gone through years of transformation, strategic pivots, and now it is likely they will undergo even more transformations with a new CEO coming in. And we don't really know what she wants to do. We do know that the chairman, Manifold, likes the strategic direction, but wants it accelerated and wants a simpler, leaner BP. So Meg O'Neill, the incoming CEO, will need to answer those questions in the coming months.
It's going to be a big year for BP in 2026. Mitchell Furman, thank you so much for joining us this morning. Now to other top stories trending on the terminal. Gold rising to an all-time high above $4,500 an ounce on escalating tensions in Venezuela and expectations for more U.S. rate cuts. Gold up more than 70% this year. Silver has risen by 150%. Both are on track for their best annual performance since 1979. French drug maker Sanofi agreeing to buy Dynavax for about $2.2 billion to expand its vaccines business. The statement came minutes after Sanofi said the US FDA had rejected its experimental multiple sclerosis drug in a surprise decision. And a syndicate, including General Atlantic, is investing hundreds of millions of dollars in Mexican soccer ahead of the 2026 World Cup. The group agreed to buy a 49% stake in Olamani Group, which owns Club America, one of Mexico's biggest soccer teams. It's also buying the 88,000-seat Azteca Stadium in Mexico City, where the sport's premier tournament will kick off next year. Coming up, ServiceNow's multi-billion-dollar bet on cybersecurity. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. ServiceNow is buying cybersecurity startup Armis as AI-driven cyber risks surge. Bloomberg's Romain Mostek and Katie Greifeld spoke with ServiceNow's COO about the deal.
When we saw this opportunity and seeing the way that AI adoption is going, this is a great opportunity for us to continue expanding in our security space. So today, our security business has crossed $1 billion at ServiceNow. And addition of Armis will allow us to now get into more new capabilities which customers are demanding from us, as well as allow us to really be differentiated as we add AI, data, workflow, with all of it being around security and making sure there are no breaches customers have to deal with. So that's really the thinking. And Armis is a very innovative company, very well regarded, great team, very good domain expertise. And the combination of us and them can really change the game in the cybersecurity space and build the cybersecurity automation capabilities very fast.
It gets to this idea, too. I mean, you mentioned sort of the potential addition to revenue. I think they talked about a $300 million run rate right now that they're sort of dealing with. This isn't obviously just about the additional revenue that you get specifically from Armis. I assume this is also about bringing in new clients and, more importantly, keeping the clients you have there.
Yeah, this is a very strategic play. I mean, we are very confident about our own revenue plans, right? We don't depend on Armis to deliver our 50-plus, rule of 50-plus, right, which is 20+% subscription revenue growth and 30+% in terms of having free cash flow margin. So we've been 50-plus for the last 10 years, and we keep on delivering that. And we're not dependent on Armis to deliver on what we have been sharing with the street. So this is much more of a strategic play. They are $340 million in revenue already, growing at 50%. But the key thing is the technology and the IP we're bringing in together with ServiceNow capabilities, as well as a lot of the joint customers we can go together with and really provide them a full capability around cybersecurity and help them with all the issues they're dealing with from one platform perspective, right? They have Armis has a lot of data around all the assets company has, the physical assets. If you look at now, physical AI is coming into play as well, robotics and other things like that. That information combined with our ServiceNow's configuration management database, which has assets around software and hardware, we can really give you a full security posture management and really give you the exposure guarantee that nothing can go wrong.
And I want to talk about your deal-making posture overall, because we're talking about Armis today, but you rewind the clock to March, you struck an agreement to buy MoveWorks for about $2.85 billion. Should we expect to see more M&A from ServiceNow in 2026?
No, I think we have all the assets we require. I think this is an opportunity for ServiceNow to really get into spaces where customers are asking us to get quicker. So roadmap acceleration plus scaled capabilities we require. But I think we are very confident with all the things we have announced so far as the core things we require from our portfolio perspective and acceleration we need to do. We always can continue doing what we've been doing before around tuck-ins and small IP purchases. But from the security perspective, I think we have what we need to become the premium security platform provider in the market today.
That was ServiceNow COO Ahmed Zaveri speaking with Bloomberg's Romain Mostek and Katie Greifeld. Coming up, tech firms have moved more than $120 billion of data center spending off their balance sheets. We'll bring you what's on front pages next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal reporting the US has moved a large number of special ops aircraft and cargo planes filled with troops and equipment into the Caribbean. President Trump has ramped up pressure on Venezuela's Nicolas Maduro in recent days. The Journal quotes a retired Air Force Lieutenant General saying the movement of assets indicates the administration has already decided on a course of action. The question remains what any action will accomplish. Next up, the New York Times is reporting Ukraine's Volodymyr Zelensky is opening the way to a demilitarized zone in eastern Ukraine to reach a peace agreement. Zelensky told reporters he's ready to pull troops back from areas of eastern Donetsk, still under Kyiv's control. The offer is conditional, though, on Russia pulling its forces from an equivalent stretch of land in Donetsk. So far, the Kremlin has given no indication it's willing to accept anything less than full control over Donetsk. And finally, the Financial Times, leading with a tech group including Meta, XAI, CoreWeave, moving $120 billion of AI debt off balance sheet. The group is using a special purpose vehicle to shield themselves from the large borrowing needed to build AI data centers. The FT says the SPVs may be obscuring the risks these groups are running should AI demand disappoint. And those are your front page headlines. Next up, we're going to be speaking with Geoffrey Yu of BNY. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A shortened trading session starting with the S&P 500 at a record. Gold also breaking through $4,500 an ounce for the first time. Wins for President Trump as a court rules the administration can move ahead with $100,000 fees for new H-1B visas. And Japan and the US agree to expedite $550 billion in investment projects. And deals under the tree. BP sells a majority of Castrol to Stonepeak. Sanofi buys Dynavax. So we might see a little profit taking today. We have fractionally lower futures. That doesn't mean anything, though. We do have 3.5 hours of actual trading once the market opens, and anything could happen in that time, even though the VIX is very low at the moment, relatively speaking. We are seeing metals continue to climb, though. We obviously have, records for many of them, including silver, gold, palladium, platinum, and so on. Let's take a look at the bond universe, because there we saw a little bit of a movement after the GDP data, and we're pretty much staying where we were at 352 on the 2-year, 482 on the 30-year. That 230 spread is wide, but I guess it could go a lot wider next year. We'll see if that steepening trade continues. And as you can see, gold has pulled back, but just barely. We're only $6 away from that $4,500 an ounce marker. All right, let's get to some individual stocks to watch now. Lizzie Burden is in London. Lizzie.
Hey, Vonnie. Well, unwrapping one of those deals under the tree, we start off with Dynavax. The French drug maker Sanofi's agreed to buy it for about $2.2 billion. A surprise step into the vaccines market for Sanofi, but this will give it a hepatitis B vaccine that's already marketed in the US and give it more presence in adult immunisation. So Sanofi shares pretty flat in Europe. We'll keep an eye on Dynavax at the open stateside, but already up 37% in the pre-market. I'm also watching AST Spacemobile. It's launched its biggest ever satellite from India in a challenge to Elon Musk's SpaceX. The two companies really battling it out to deliver space-based connectivity to mobile phones. SpaceX's Starlink, of course, has its own partnership with T-Mobile US, and AST shares up 2.5% in the pre-market already. Just finally, we look to Nike. The Apple CEO Tim Cook, who happens to be on the board of Nike, bought nearly $3 million in Nike stock. So the shares notably dropped earlier this month after Nike warned of weakness in China and at its Converse brand. But Tim Cook eyeing an opportunity here. So you're looking at Nike shares up 2.4% almost in the pre-market, Vonnie.
Definitely seems to be a fan. Lizzie, thank you so much. Lizzie Burden there in London. Well, this year has seen a series of rate cuts across major central banks around the world. Many policymakers have signalled they're near or at the end of that cycle. Joining us now on what's ahead in central banking for 2026 is Bloomberg's Ben Ram. Ben, who continues to cut? Does anyone? Is it really only the Fed left with that possibility?
Well, I think that, the popular opinion and the markets and indeed Trump wants lower interest rates. But the reality of the U.S. economy is that, you saw the economic numbers yesterday. I mean, the numbers were way better than what anyone was expecting. And then if you look at core PCE, we have been averaging around 2.8% this year. So if you juxtapose those together, that hardly spells a rate cut to me. I mean, in fact, it's not just me. If you look at the Taylor rule rate, it is suggesting that the rate should be somewhere between 350 and 375, which is exactly where we are. And that may be just one reason why the Fed's dot plot suggested just one rate cut for next year, predicated on inflation slowing. So given the current inflation, I think policy settings are exactly where they should be, according to the prescriptive rule. Now, obviously, White House wants a lower interest rate. The next Fed chair is likely to be dovish. So we may get lower interest rates in the US, but elsewhere, if you look at Australia, if you look at Japan, if you look at New Zealand, definitely the European Central Bank, the lay of the land is suggesting that interest rates may be heading higher. The Bank of England may be another exception where they have wiggle room to cut rates by at least 1 quarter point margin. So I think those are the two big economies where we could be expecting a rate cut. Wani?
Yeah, and I mean, I guess there's the potential for a surprise. Which major central bank could surprise, given that we still don't really know what the Fed is going to be doing next year, and partially some of those moves will depend on what the Fed does?
Absolutely, but I think that it is safe to think that, the Bank of Japan has got a lot of catching up to do on rates. I mean, if you look at what the inflation projections are, which is 1.8% for next fiscal year, albeit the realized inflation is running at almost 3%. So, and if you look at the growth projections, they're projecting growth above trend next year. So all those would put together would suggest a policy rate of around 1.5%. So which means that they are now at 75 basis points. So I think that, they've got a lot of catch up to do. And the question is whether they are willing to go at the pace the market wants them to.
All right, then we'll see. I guess the currency markets, if not the bond market volatilities, will decide that for us. That is Bloomberg's Van Raman. Thank you so much. Geoffrey Yu of BNY says money knows no holiday, with the week pivoting on liquidity, the rotation trade, deals, of course, and dollar downside. He writes, dollar hedging is likely to rise into the new year. A breakout from recent ranges would require a shock from an unknown risk. He's EMEA Market Senior Strategist at BNY and joins us now. So, Jeff, how much of this is dollar weakness and how much of it is strength from currencies like the yen, the yuan, which is seeing significant strength today thanks to verbal intervention in South Korea, and, of course, the offshore yuan as well?
Hi, so it really depends when you ask. I think if we had to talk about today, it really is a local issue. So as you mentioned, we've had a verbal intervention across Asia. But I think one thing to highlight is where the renminbi leads, much of Asia will follow because the currency is such an important component in local trade baskets. So in that context, if local central banks have enough confidence that the renminbi will strengthen heading into next year, that gives them enough room as well. But on a standalone basis, if we look at Korean won, if you look at Taiwan dollar, there's a very, very strong valuations case. And of course, same for the Japanese yen.
What are the Chinese thinking right now, Jeff? Will they actually do something?
I think it really depends on what individual sector, what's the individual policy. So you need to take things on an idiosyncratic basis. So the recent round of data could have been better, of course. So there's talk of stimulus already. This morning, we've seen a flurry of new housing measures from Beijing, even to loosen restrictions. So those are targeted there. Renminbi, I think we're seeing some tolerance, or a lot of tolerance, really, for appreciation, even though some would say that actually counters inflation. I think this is a sign of stimulus as well. Stronger renminbi, cheaper imports, and that helps address some of the trade issues too. So they're looking things on an individual basis, but they will stick to the growth target for sure.
Have you got any concerns about the situation in Japan or in South Korea, but perhaps more so Japan, given that we have a little bit of a divergence between what the government wants to do and what the Bank of Japan has to do or can do?
So I think the market is attentive to intervention-related rhetoric. So in the same way that we've seen similar comments from $1. But at the same time, I have to look at positioning here. So our data indicate that there was really strong yen selling between, say, late September all the way through the end of November. That has tailed off a bit. So for clients and for investors who wanted to be defensive on the yen, they have those positions on already. So heading into year end feels like there's a bit of profit taking going on. If I look at rebalancing needs, maybe they want to own some yen, but heading into next year with a fiscal plan, it really is about execution. So as you stated, confidence, I think that needs to be earned. So whether they can deliver the growth, they deliver higher real rates through softer inflation, allow the BOJ to do its job, all of that is going to be so important for how the yen performs.
Jeff, moving back to the United States, what do you make of the GDP data that we got and what it means for Federal Reserve moves and indeed the yield curve next year?
So I think Ben really said it well. Does that seem like an economy where rate cuts are going to be needed? And it's not just a specific US issue. I think net, it's still going to be data spend. We're still within this phase where data is just coming back on stream. So the market's going to give the US economy quite a bit of leeway. I think there are two things to look at in terms of financial conditions, and that's essential to the Fed as well. How equity markets perform. So right now we're seeing a bit of a Santa rally at this point. That helps loosen things. And of course, in a second, how inflation-related data, especially the wage data, performs as well. So if that softens the case for further easing, I think markets can live with it for the time being. But again, a lot of central banks around the world, they are looking to pivot, not confirming it yet. So it just looks like the cycle where we are right now in the US and beyond, it's pretty different compared to where we thought it would be 3 months ago. That's for sure. We're at the beginning of the year. Remember when we thought there was going to be 7 rate cuts this year? It boggles the mind. I mean, and that could happen again next year. So what do you do? Is the steepener trade in the US at least the right trade? So I think the steepener trade for a market that is so focused on fiscal dominance, that's going to be in place for some time to come. And if I had to pick some more central bank surprises, asking about that earlier, if I look at Central and Eastern Europe, for example, where governments are revising higher their fiscal deficit targets, we're talking about 5%, 6% in these economies. Are they going to start hiking, even though they're talking about easing right now, places like Hungary and Poland? I think that's something to look at. So certainly you do want selectively to have those steepening positions on. But if there's a pivot in the opposite direction where you have a coordinated framework between fiscal and central banking authorities to push back against the prospect of fiscal dominance, they want to bring down inflation, then I think these markets, I think South Africa is a good example where markets will reward them handily as well. So both sides of the coin. Jeff, we've a VIX just above 14. It closed at its lowest level of the year the other day, and we have gold above $4,500 an ounce. What does that divergent narrative say to you? Yeah, so just looking at gold as part of the asset allocation framework, I think then that's in part an extension of the steepener trade that we mentioned earlier. I know sometimes that doesn't really go hand in hand because higher bond yields, especially higher real yields, don't really help gold prices, but it seems to have broken out on its own. So again, that is another defensive element coming through. I look at our flows, Swiss franc, it's really been knocking it out of the park. That's sort of the only solid currency within developed markets right now that really has bona fide safety status. So even though equity markets are doing well, even though data points to a bit of a risk-on environment, I do think that on the margins people want to be defensive against inflation and other risks as much as possible. Hence, gold is doing well. And to be frank, next year, no pun intended, the franc is going to be one of our preferred plays as well, especially within Europe. I see. All right, Jeff, thank you so much for all of that context this morning. That is Geoffrey Yu of BNY. Always love chatting with you. Now to other top stories trending on the terminal this morning. Gold rising to an all-time high above $4,500 an ounce on escalating tensions in Venezuela, expectations for more U.S. rate cuts. Gold gaining more than 70% this year. Silver has risen by 150%. Both are on track for their best annual performance since 1979. BP has agreed to sell a majority stake in its Castrol lubricants division to U.S. investment firm Stonepeak Partners to raise about $6 billion. The UK oil giant will divest a 65% stake, retaining the remaining interest via a joint venture. The Castrol business includes lubricants for autos and industries, and it's also been developing liquid cooling technology for artificial intelligence data centers.
Jane Street has hired Washington lobbyists for the first time in 20 years. And top executives have been meeting with lawmakers to explain the firm's business. This as the Securities and Exchange Board of India investigates Jane Street's trading strategies, including allegedly manipulating the country's biggest index. Jane Street has denied any wrongdoing in India and has appealed the regulator's interim finding. Coming up, President Donald Trump gets the green light to move ahead with a six-figure H-1B visa fee. We'll look at what this means for business next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. A federal judge says President Donald Trump can go ahead and charge $100,000 for new H-1B visa applications. It's a major blow for tech companies that rely on hiring skilled foreign workers. Bloomberg's Kasia Klimashinska joins us now from Washington. So what are the tech companies doing, Kasia, and is there any appealing this decision, or is it now final?
Not a good decision for the tech companies like Meta, Apple, or Microsoft. And this is the decision that was issued after a lawsuit from the U.S. Chamber of Commerce, the biggest U.S. business lobbying organization, which can still appeal the decision because it's saying that such high fee will effectively kill the program and make it impossible to bring foreign high-skilled workers into the U.S. But the judge has said that President Trump has the right to do so as he seeks to boost the opportunities for American workers. There are more lawsuits pending. There is one, for example, for global nurse hiring organization, and also another one for state attorney generals who point out that a lot of public sector, like healthcare entities, are hiring those high-skilled workers as well. So we have to see, but for now, President Trump can go ahead with this plan and charge $100,000 for a visa.
And Kasia, moving to a different subject now, Ukraine seems to be opening the door to some kind of compromise, a demilitarized zone, if Russia also pulls out of Donetsk. Is this a workable plan in any way at all?
We have to hear now, especially from President Putin. We know from Interfax that Putin's spokesman, Dmitry Peskov, said that the president of Russia is now looking at the outcome of those most recent talks. But we know that basically Russia is insisting on its demands, especially for more land, but also for the Zaporozhye nuclear power plant, the largest nuclear power plant in Europe. Remember also President Trump, who is in Florida this week, and he's not speaking much to the press, but he spoke on Monday, and he said those talks with Ukraine and especially and separately with Russia are going okay, but he didn't sound too optimistic. So I think there will have to be more talks before we hear about an outcome. But you never know, around the Christmas time, maybe there will be additional effort to end this war, as it's, about to be 4 years of fighting.
Yeah, it has. It's been a while as well since Japan and the US talked about these investment projects, but now it seems that there's going to be some kind of expediting these $550 billion worth of projects. What do we know?
Yes, those talks have intensified as President Trump really wants to see those investments. He issued a threat to impose higher tariffs on goods from Japan, but Japan promised $550 billion of investments. So now the two sides are talking about which specific projects this money will go into. They will present a variety of projects to President Trump, and he will issue final approval. And at that point, those new perhaps plans, maybe investments in manufacturing in the U.S. will move on. So the idea here is, of course, to bring more money into the U.S. to create jobs here in the U.S. for American workers.
All right, Kasia, thank you so much for everything, and happy holidays. Bloomberg's Kasia Klimashinska there. Turning to pharma, Sanofi shares lower after the French drug maker said the US FDA rejected its experimental multiple sclerosis drug. Joining us now is Bloomberg health reporter Ashley Furlong. It's not just that, they're also doing a deal. We'll get to the Dynavax deal in a second. But first of all, this setback, what does it mean for Sanofi?
This is a significant blow to Sanofi. The company has a patent cliff looming. Dupixent, its top-selling drug, it is coming off patent, so generics are soon going to be competing with that drug. So the drug maker is really looking for, medicines that could replace that revenue, and this was going to sort of help it do that. The estimates were around 1.7 billion in peak year annual sales for this multiple sclerosis drug. And most of that would obviously come from the US. With the FDA's rejection, that's obviously very uncertain now. So this is a significant blow to a company that's had several setbacks already with drug development this year. And analysts and investors will be looking to next year to see, how they're going to solve this problem.
And it's currently under review in the European Union. It could win agreement there, I guess. There's still that question mark out there. But it also agreed today to a $2.2 billion deal for vaccine developer Dynavax. And that's pretty, intense because Dynavax has a Hep B vaccine out there. Is it surprising it's doing this deal?
It's surprising. Obviously, Sanofi has a big vaccines portfolio, but it's an interesting time. In the US, we've obviously seen a lot of negative vaccine sentiment. The US Health Secretary, Robert F. Kennedy, sort of undermining vaccines in multiple different ways. Obviously, most of that has been with childhood immunizations rather than adult vaccinations. And this deal is mainly focused on adult immunizations. For example, they have a shingles vaccine in development, and that has been, quite a boon for a competitor, GSK, which also has a shingles vaccine. But it's an interesting time to be doing a vaccines deal. And also globally, we've seen sales of flu vaccines drop. So it is a surprising time to announce this. But obviously, Sanofi is clearly betting that, in the coming decade or the coming years, we'll still see high demand for vaccines, even with this negative sentiment that we're seeing, particularly in the US.
Yeah, and I want to point out that Dynavax shares are up 37% in pre-market trading. And of course, that price, $15.50 a share in cash. Ashley, thank you so much. That is Bloomberg's Ashley Furlong there. Coming up, we're going to get you set up for your shortened trading session. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Initial jobless claims, well, they come out at 8:30 a.m. Eastern and could provide a catalyst for a very shortened trading day. Plus, the Treasury will auction $44 billion in 7-year notes. That's at 11:30 a.m. And as I was saying, U.S. markets closing early today. So equity markets close at 1 p.m. Bond markets close at 2 p.m. Eastern. Let's take a look at some of the pre-market movers now. Sanofi, obviously one of them, buying Dynavax for $2.2 billion to boost a vaccine lineup, an adult vaccine lineup. It's Dynavax that's up 37%. Sanofi actually trading a little lower. AST Spacemobile is higher as well after launching the biggest satellite to challenge SpaceX. And we have Nike up 2.3%. Apple CEO Tim Cook, who's on the board, bought nearly $3 million worth of Nike stock, and plus it is the holiday time. Let's take a look at the macro picture now as we approach 3.5 hours, a full 3.5 hours of equities trading. We have futures pointed very fractionally lower, but the S&P is going to open this session at a record, as it has done so many times this year. Gold, $10 away from $4,500, and it did bypass that mark, so we are at records for gold as well. A little weight to the dollar index. We have strength for the yen and the South Korean won today, and also watch that offshore yuan. That is trading very, very close to the 7 mark. And I do have a programming note. Brief will be back after all of the holidays on January 5th. So set your alarm clocks and your calendars right now. That's it for this year for Bloomberg Brief. Thanks for watching.